Good morning, ARMR Insiders. Good morning, ARMR Report subscribers. Basically, anybody watching this video, good morning. It's our live stream of our morning meeting. This is a virtual hedge fund. So what we're doing here is working collectively as a group. Chief Investment Officer, I'd like for you to think of yourself as a portfolio manager. We're getting ourselves ready for the trading session. So grab a pen, a piece of paper. Whatever I talk about right now, this is how I run my own personal capital. So how I run capital for other investors. Been doing this for over 35 years, sharing with you strategies that have made me a lot of money, and at the same time sharing with you mistakes so you don't make those mistakes, right? So at the end of the day, whatever I talk about, you have to think for yourself. What's your risk tolerance? What's your goals? Execute your strategy and be the smart money. All right. So first thing we're going to do is dive into a discussion, not about Dell, but about the indexes. Okay. So we manage our virtual hedge fund like this. We have a macro section of our fund. All we do is invest in double the indexes in that portfolio. Okay. So when our risk monitor goes green, that's when we have our maximum exposure on. When it goes yellow, we reduce exposure. When it goes red, we remove exposure. It's really pretty simple. 8 out of 10 stocks follow the market. And so this is the portfolio that leads everything else we do. So that portfolio went 100% risk on. Most recently, right in here. Okay, around the 9th. That's when we most recently went 100% back on risk on, right? So right in here was yellow. Market kind of consolidated for a few weeks, popped out. ARMR algos went positive. And so what we're looking at there is 10 different indexes. And when they all say the same thing at the same time, that's institutional flows of capital. Institutional flows of capital generally last more than a day or two. They're committing billions of dollars, and so they have to have a vision of where they want to go. When they start putting capital to work, it usually continues for a while. It's a pretty simple concept, right? And then 8 out of 10 stocks follow that market. So from here, we are risk on and aggressively risk on. Now, we do have a more sensitive strategy just for trading the S&P. And what we do there is we trade SPXL, which is triple the S&P. Okay, trade number 25 ended a few days ago. Another profitable trade for us. That portfolio is up 184, let's call it 185+% since we've been doing this over 35 months. That's not back tested, that's real trades. And so on our trading desk, we use this as a tool both to trade triple the S&P from a swing basis, but also to tell us, hey, when that strategy, which is incredibly accurate, goes risk on, it's been accurate about 90% of the time, we're going to have our max exposure. And when it gets stopped out, we're booking profits, we might raise a little cash somewhere. So in the macro fund where we own double the S&P, double the NASDAQ, so QLD, SSO, double the small caps, UWM, and double the Dow, DDM, we booked some off the top, maybe about 20% of the position we reduced. Okay, so we're still 80% long in the macro fund, giving us about 160% performance versus the indexes. Okay, in the macro fund, we also have precious metals, so we can go over that real quick. Just a juggernaut. Precious metals has just been killing it for us. Okay, so physical gold, we're long physical gold. A lot of the guys on our desk are long physical silver. Silver stocks, gold stocks. We have a basket of micro cap stocks that are performing really well. So that's what the macro fund looks like. Now, let's talk about government shutdowns before everybody gets all excited about it. Government shutdowns mean nothing to how we run money. Nothing. That's a whole bunch of noise. The ARMR investing way is designed to get rid of the noise, read and react, and execute our strategy. Algo tells us to get long, all the algos, right? Proprietary algorithms help us get long, put our capital to work. Then we just manage success. Stocks hit targets, we book profits. They hit stops, we remove. risk monitor changes yellow or red, we reduce. That's it. Everything else is noise, and it's designed to help you out, to help me out, simplify this and get rid of the knee-jerk reactions based on ridiculously worthless news cycles. Okay. And if you want to go back and look at other government shutdowns, how about the shutdown of 2018, which was the first Trump shutdown? Democrats refused to, whatever. Let's don't get political. So they have an argument. I think that lasted 23 days. Market doesn't go down on government shutdowns. Just go do the math. Go look at the results. In fact, if you look at the results of government shutdowns, generally when the shutdown's over, market does really well with actually the leader over the next 3, 6, and 12 months being small caps. I don't know why. I don't know why. Let's don't fight it. That's just the fact of government shutdowns. So this time around, it's funny. I think in 2018, the S&P was down 7% into the shutdown, and then it rallied. This time around, the market doesn't care about the shutdown. It's been pretty strong the whole way. So let's don't waste time talking about shutdowns. Let's just execute our strategy. And so what I wanted to discuss with you today, ladies and gentlemen, we're doing this every Wednesday. We do a live stream for all of you to join, and we talk about the ARMR investing way. I call this ARMR education, and we discuss a particular tenet of our strategy, something important about how we manage capital. Today, what I want to talk about, what you hear me discuss on this trading desk, is trading around the core. So today's ARMR investing way education focus is trading around the core. So let's discuss what that is and why it's so important. In order to have true success long-term as an investor, you absolutely must ride your winners. It's hard to find them. I'm talking about the stocks that can 10x over a 1 to 3 year period. When you hook into a winner like that, it's imperative that you maximize the return on that investment. How do we do that? And at the same time, manage risk. I mean, ARMR report. ARMR stands for Algorithmic Risk Management Research. I call this strategy, ARMR Investing Way, Algorithmic Risk Management Research, because I want everyone to understand that focusing on managing risk is what professionals do and individuals don't do. Okay. And so what we're trying to do here at this virtual hedge fund is share what works. I ran hedge funds for a decade. Right. We had a real nice run. So we've turned that into family office that we manage, individual capital we manage. And this process, we open a virtual hedge fund to share these tools with you, right? So you've got to manage risk. How do you dovetail that with trading around the core? I should say, how do you dovetail that with riding a winner? And the answer is trading around the core. So there are going to be positions in our portfolio where we hook into a monster. You gotta maximize it, because those monsters pay for a lot of, I don't like to call them mistakes. I mean, you make investments and they hit the stops. That's part of investing. So you're going to take some losses. You want to ride your winners. You want to cut your losses. In order for that balance sheet to balance, the winners have to run in the portfolio to make up for whatever losses you're taking and have your net worth increase in a meaningful way over time. So how do you marry that, riding the winners with managing risk? Okay, it's trading around the core. We find positions where we've hooked into a winner. You know what I'm talking about. You put on a position. I'll give you an example. You put on a position like, let's go with SanDisk, okay? You put on a position in SanDisk, whoops, and the stock absolutely skyrockets. We buy it here, we're up like 130% on the stock in a month. You know you've hooked into a monster stock. There's fundamental reasons for it, earnings revenue explosion, and you want to stay with the winner. So what do? You trade around the core. When you hit a target on a monster winner like this, and this stock blew through our targets, in this case, okay, blew through our targets, skyrocketed, doubled inside of a month. At some point, we're going to book some profits on that position, maybe 25%, maybe 50%. You might swing trade half the position, hold the other half as your core holding. So a target gets hit, you book some profit. You might have two stops, one that's very aggressive. So if the stock then comes down, you book some more. So you're booking some at target, booking some at an aggressive stop. And then you have a much more lenient stop for the rest of the position. Okay. Maybe I'm saying half. It could be 25, 30, whatever you want. I'll leave it up to you. You're trading around the core. Some percentage you treat as a swing trade. Some you treat as an investment. The swing trade has daily stops, maybe even intraday. The investment weekly stops. You don't touch it until Friday at the close, Friday at 3:30. And then what you end up doing is you have a bunch of stocks in your portfolio when you're in the midst of a ripping bull market like we are. You have a bunch of stocks in the portfolio that look like SanDisk, where you've booked profits after the initial explosion, and then you're looking to trade around the core, which means, and I'll use IBM as our example because we're doing this on IBM, which means every time there's weakness. So we started putting on IBM back here in the number 1 slot. Rallied up, had a big win, booked profit in the A, pulls back, adding to the position again in the 2 slot. Runs up, book a profit at B. We ended up adding to the position in the 3 slot. Booking profits at C, adding it cheaper in the 4 slot. Okay. So we have a core IBM position. We're now long-term on that position. This is also helping us with our tax situation, right? We have a long-term capital gain. But all the way up, we're trading that swing piece with our core, and that's what we call trading around the core. And so when you get into a really wicked bull market like we're in now, ideally, you're going to have, I don't know, if you're running a portfolio of 15 stocks, let's say, but maybe that's all you're doing is investing, you have 15 stocks in a portfolio. As the bull market matures, you might get to a position, 7 or 8 of your positions, you're trading around the core. If you're lucky, you got 10 positions on, and all you're doing in the back half of a bull market, all you're doing is trading around the core of your huge winners. All right, so that's something you want to consider as you're managing capital in a bull market, in any market, to maximize your winner, but at the same time, manage risk. Trade around the core. So now let's talk about changes to our portfolio, stocks to watch, stocks to buy, stocks to sell, because it kind of, again, I'll say dovetails with this conversation of trading around the core. Every position I have in my portfolio, I earmark it. I say, this is a pure swing trade. All I'm trying to do is get on with an ARMR algo entry point in a stock that I like. It pops. I want to book my profit there. So I use aggressive stops. I might book some profits at a target, very aggressive stop, exit the position when the stop is tripped. Okay. And then there are other positions in the portfolio that I'm looking to invest in. Okay. So what I did yesterday in the portfolio, let's go over the sales first. I'm shifting some capital in my portfolio and booking profits in some of the concept stocks where we had a big winner. Concept stocks to me are swing trades. They carry a high 20-day ATR %. So the volatility is huge. And when I get paid, I want to take it. When I'm up, let's say 40% on a trade, 50% on a trade, and it's a concept stock, I have very tight stops. I raise them. I get taken out. Excellent. Because I want to book that gain and I'm looking to reinvest. And in this particular case, I'm going to share two stocks that I bought yesterday that I view as more investments as opposed to just swing trades. Okay. So I booked my profit in qubits. Doesn't mean it can't skyrocket again. It may, but I made the money I want to make there. We booked our profit in American Eagle Outfitters. It could hold here and skyrocket. I might even trade it again. But for now, it went below my stop. We booked more. I think it was like a 45% gain. We booked some here. We booked the rest in the pink. We're out of AEO. And then I just cleaned up my coal positions. Nothing wrong with Warrior Coal. This could still be owned. It's just how much coal do I need? And right now, I have a large position on BTU, which is skyrocketing, and Core Natural is the other position I want to hold. Okay, so I booked a profit in HCC. So that's the tidying up of the portfolio I was doing yesterday. What stocks were I buying yesterday? Well, I wanted to share with you a graphic. Thank you, Erez, Armor Insider and Analyst Erez, for sharing this with us. You've shared this with us before, and I think everybody could use this chart. You can go ahead and publish it, print it up, do whatever you want. But this is a typical data center, a data center for AI, right? And if you look here, all the companies that are involved, all the companies, all the stocks that we can invest in that are involved inside of the data center build out that's going on. And there's many different kinds. And if you look right here, you got Caterpillar, Cummins, and Rolls-Royce. They make generators, okay? I'm not buying those stocks because what I'm looking for are companies where the majority of their revenue comes from the data center. Obviously, the majority of Caterpillar's revenue doesn't come from the data center. So I'm not buying that. But notice over here, Dell, HP, Supermicro. Dell, whole bunch of servers in there, right? Take a look at here, switching gear, Vertiv, VRT. These are the two stocks that I'm buying today. How about over here? Power distribution, Vertiv. How about over here? More Vertiv. Okay, so what I was doing was taking capital away from swing trades where I was in concept stocks that in many cases are losing money with tiny revenue numbers and shifting to companies with explosive earnings and revenue growth. Okay, so taking a look at VRT, we took a shot at it a couple, I think 2 weeks ago, and it reversed, sold off, held the stop location, follow on buy trigger. So I call it 2A. 2 is here, 2A, and we're on VRT now. Okay. The other highlighted stock of the day is going to be Dell Computer. And I got to be honest with you, I'm getting kind of nostalgic. I feel like it's like the 1990s again. IBM, Intel, Cisco, Dell. I mean, it's kind of strange, but that's where we're at. Okay. So Dell, you could see, is inside the data center with servers. But I think Dell, this is kind of an interesting situation. Dell's getting it on all ends. I think they're really poised for some significant growth. By the way, October 7th is going to be an analyst day for Dell, and they'll probably come out on that day and either adjust guidance. Hopefully they adjust it higher, and maybe they just come out and reaffirm it, whatever. But analyst days can be a catalyst for companies, and we're expecting that to happen next week. We'll see. The ARMR algo gives us an entry point yesterday. We put the capital work. We use a stop. So whatever I'm telling you today, we get stopped out, we're out, right? Just don't ever forget that. Algorithmic risk management research. Manage risk first, capture upside second. Okay, so Dell is going to get it from more than one area. Yes, it's a data center AI build-out play, but it's also, I think we're on the cusp of a whole PC upgrade cycle. And I think AI is driving that. And I think Microsoft, we're all noticing that Windows 10's support's going away, Windows 11's coming out. So man, people have been making money off Dell upgrade Microsoft cycles since the 1980s. I mean, or 1990s when the Dell got started. I mean, so there's a cycle there. When you go through major step changes in Microsoft, okay, Windows, and a major step change for the basic PC, which perhaps it's the integration of AI into the PC world, right? So you're buying a new computer and it's so integrated with AI. And so that could be the beginnings, along with Windows 11, that starts a basic tailwind that we always see in these stocks. So you put that layered on top of the data center AI explosion, and Dell becomes very attractive to me. And this is one of my favorite chart patterns, by the way, right? We've made a lot of money off this chart pattern over the years of working together. So putting capital to work in those two positions based on that data center picture is something that we're doing today. And then just wrapping up, a couple of thoughts. If you have a question, I'm happy to answer it. We don't have much time left. Throw it into the comments section of the video. I'll answer it now, or if you're watching this later, I'll try to get to it later. Added shares of Celsius. So this is a stock to watch. We added that back to the portfolio yesterday. Talked about that yesterday. We're seeing a Nike earnings announcement. This has been on our list for turnaround story for a while here. We tried to trade. We exited the position. It went lower. Today it's going to gap up after earnings. At some point, Nike's a no-brainer for a turnaround story. At some point, this last earnings announcement looks pretty good, and so perhaps the turnaround started. So it's back to the top of our list to watch. That's a stock to watch. Coinbase. We've added Coinbase. We talked about that yesterday. We added that a couple days ago to the portfolio. Stock's going to gap up a little bit. We're looking at 116 on Bitcoin during the shutdown. Gold and Bitcoin and silver seem to like the shutdown idea. But those stocks, those assets have been working anyway. So Coinbase, certainly a top pick for us. And we're long that position along with Interactive Brokers. Real nice breakout on Interactive Brokers. We made the money from 1 up to 2 up to here. We booked our profit in the yellow box. Consolidates at the 50-day moving average. We're back on it in the green box here, number 3, and we're starting to make some money there. So those are positions that we've got in the portfolio. You now have your stocks to buy, stocks to watch, stocks to sell as we see it. I've got to get the live trading desk started. ARMR Insiders will do that at 9:30. Everybody remember, we have a Substack. You're going to want to subscribe to that. It's free, okay? ARMR Research. Couple of different reports a week in review every Sunday. You're going to see all the captain's notes from these morning meetings in a summary for you, so you can see what we did last week and see how we're preparing for the following week. That's on our Substack, ARMR Investing at Substack. Go check that out. Subscribe for free, and you'll get that information. I hope you guys have enjoyed this discussion. I hope it's helpful to you. At the end of the day, now you have to forget about everything I've said. Then you have to ask yourself, what's my risk tolerance? What's my goal? How am I going to manage my risk? How am I going to capture upside, execute that strategy, and be the smart money?